Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top 3 stocks to own during a falling market. Now before we jump into the episode here, right now we're doing the AirPods giveaway. So how you enter, it's super simple. All you have to do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you do that, you guys will be entered for the giveaway. We're doing it this Friday on my Instagram, so all that will be down below for you guys. Alright, now we're going to be turning to the computer so we can look at the stocks, the stock charts, and really see some of the stocks that I see value in during a falling market. So I hope you guys enjoy it, and I hope you guys learned something. We'll see you in there. Let's go. Alright, so the very first stock that I do see value in during a falling market here is ticker symbol V, also known as Visa. Now, one of the main reasons why I think that is because when the economy and the overall market starts falling, people use credit cards more. So people use credit cards more, and guess what? Visa owns credit cards. So what will happen is these banks are gonna offer interest, and Visa's gonna get paid for these cards, and they're gonna make a lot of money doing it. Now, if we go ahead and look back at 2008, and 2008 was actually a decent, it was a pretty bad time for a lot of people. But if you look at Visa, it literally had a highs of almost 16, if not a little past 16, and a low of $5.30. So we did have this move, but if we continue to look, we had bigger price gaps later in the market. So it was very common to see Visa fall down a little bit. Now, if you guys look at this line right here, this is what you call a 90-day moving average line. And one thing that I like is it always uses it as support. So you guys can see it never falls below it. And so there could be a possible good short time when it does fall below it. We could get a short in, and that could be a possible trade. But if you guys are holding this, dividend stocks do perform better in a falling market, and you guys can see the dividend offered is 30 cents. So it's not too bad. It is a little expensive, but Visa does do good during a falling market. So moving on to stock number 2 here. Stock number 2 is Johnson & Johnson. So Johnson & Johnson, in 2008, when we did have this huge falling market, Johnson & Johnson did perform better than a lot of other stocks. So you guys can see all the way back here in 2008, we had a high of $41 and a low of 16. So this was like a 27% gap down. But as you continue to see, the stock continued to surge up, and it did do better than a lot of other stocks. So when the overall market falls, Johnson & Johnson doesn't fall exactly with it. It does fall a little bit because most of these stocks do fall, but you want a stock that's still going to offer a dividend, and B, perform better than a lot of other stocks. So Johnson & Johnson, in my opinion, is a great stock to have. Back in 2008, it only fell 27% as compared to the S&P 500, which fell 55%. So you guys can see those big differences in owning the stock. So the dividend offered is roughly 2.4% yield, which is pretty decent actually for a stock. So you guys can see it's a 95-cent per share stock, and it's not even $200 compared to Visa. Visa only offered that 30 cents, and the stock was over $200. So Johnson & Johnson is a great stock to have during a falling market, and a lot of people kind of turn to the stock to actually own. So let's go ahead and move on to stock number 3. So stock number 3 is Realty Income Corp. So this stock does offer a monthly dividend of roughly 23%, and the dividend per year is 3.3%. Now, this stock draws a lot of people to it because it is a real estate stock. So they get a nice dividend each month, as like you would be owning like a income property or something like that. So this stock fell 43% in 2008 as compared to the S&P 500, which only fell 55%. So these dividend stocks do perform better in a falling market. A lot of people own dividend stocks just for that reason, knowing that dividend stocks do perform better. So you guys can see the high is roughly $80.15, and the low for the stock is 79 cents, but the historical low is $27, and the historical high is roughly $81. So you guys can see it is coming in contact with this recent resistance. And yes, I do think a falling market is coming and a recession is coming. So maybe we should wait to actually purchase the stock, wait for it to fall a little bit. During a falling market, that is one of the best times to actually purchase stock and buy stock. So that is it though. Hope you guys enjoyed the episode. And if you did, drop a subscribe down below. Do what you guys do. Don't forget about the AirPods giveaway. And don't forget about the free Moo stock if you guys get by signing up. So we'll see you guys tomorrow in another episode. Take care. Have a good one. I don't know. Peace out. Bye.